I heard there was some scheduling change, so apologies if you guys had to wait a little bit, but here we are now. So, I got 20 minutes, so I'll try to, put everything in these. Maybe we have some questions towards the end. So I'm here today to talk about, mostly I know we have people from different, some of you work at brokerages, some of you are customers, some of you are partners. So we have, a mix of audience. But I will talk today about from a broker's perspective and then a little bit of my personal perspective around customers. The seemingly most important thing that, in our business, well, every business really, that is. So in terms of, it seems simple to understand. Okay, what should we do? Who are our customers? What should we do? But in reality, customers is your #1 ingredient for success. I mean, I said already in brokerage business, but in reality, in any business, it's not your technology, it's not your sales team, not your marketing strategy, not even your partners. And no disrespect, I know we have a lot of partners here. It is your customers. Why? Because if you don't have customers, you don't have business. It's as simple as that. So today I'm going to talk about understanding what it is truly like to understand your own customers. We work brokerage sector is an incredibly complicated technical sector. So how many of us kind of it's a general truth, but how many of us actually can say that they truly understand who their customers are and what these customers want? So okay, so why do you need to understand customers? You need to understand customer needs so that you can begin develop solutions to solve customer problems. Ultimately, the sector is ultimately our goal is to solve customer problems. By solving customer problems, you generate value for the customers, and obviously with the value, that will eventually equate to the new and repeat business. So in terms of so a bit of an afterthought here, once you've kind of nailed down that, value proposition, you can then begin to engage your sales, marketing, and other teams. But first, create value for your customers, be relevant, get into the habit of solving your customer problems, understand your customers. Okay, so how do you understand your customers? You understand your customers by understanding your customer needs. There are two ways to do it, and this again is applicable to any business, but there is a quantitative approach and a qualitative approach. So just to summarize, in terms of the quantitative approach, use your customer data, statistics, the data that already exists in your organization. Do you know who your customers are, what they trade, frequency, average hold times, asset classes? Use that data that exists in your organization. Study your data. Use BI solutions. Use data warehouse, CRM, broker client terminal, spreadsheets, anything that you really can get your hands on. And then finally, look at behaviors. Don't look at demographic, attributional data. Look at behaviors. What are your customers doing on your platform, on your trading platform? What do they trade? What direction do they trade in? Do they trade in the direction of where the market is going, et cetera, et cetera? Why? Because you're looking for trends. You're looking for patterns. Once you start looking at that, you can then start asking questions. Questions like, are your customers trying to score big by taking outside risks? Are your customers methodically trading gold? Are your customers sitting on, single stock positions? Do you know that, in your organization? And if you do, then do your customers get stopped out each time the market, for example, moves 1%? Do your customers burn through their accounts because they use 100% of their margin every time the market makes a swing? Do your customers close their positions because they've collected a dividend? These are all behavioral questions, behavioral patterns, behavioral problems for you or for your customer. So the goal here is you're trying to really get down to it. You're trying to understand what is your customers are trying to solve. They're coming to you because they have a problem. They're coming to you because they are looking to solve something that they've been working on. That's why they're there. And they will only stay with you if you can offer solutions. Your outsized risk trader from the previous slide, from the previous example. How many times do they need to get stopped out before they leave you for a competitor? And what are you doing about it? Are you offering them another credit line, in the hope that they will redeposit with you again? Maybe, and just maybe, instead of tell them that with the leverage that they're using, in this example I use 100 to 1, the market, with that leverage needs to move a mere 0.5%, half a percent, for them to get stopped out. So perhaps, it's a conversation where you sit down and instead of getting them on the phone and asking them to, sir, you had a bad day, increase the size of your account, just tell them to increase their margin. So let's look at the example. This is an example from a few days ago. Let's go back to the outsized risk trader. So let's make an assumption. You have a customer, you have a trader. They're taking an outsized risk. So let's say they're short on the S&P 500. This is an S&P 500 chart from CME. So let's say they're short. They're trading with 100 to 1 leverage, and they're utilizing 100% of their margin. A very simple example, but I see this a lot, for example, in my day-to-day. So if we look at the chart very quickly, 22nd of September, so last Friday, market moved up. If you can see, it's hard to see on the screen, but market moved up 0.6%. In this example, the customer would have been stopped out. And like the annoying feeling of where you got stopped out 1 inch, if market would just made 1 inch lesser move, you would have still been in your trade. And what happened later that day, the market reversed. And the customer, moved in the right direction, 0.5%. So the customer would have been in profit. But to put things into perspective, if you are or you have customers that are using 100, 500, 1,000, 3,000 unlimited leverage, right? Like just look at what happened last week, 4.3% move in just one week. So you ask yourself, am I the 100 to 1 leverage trader? Am I the guy who is sitting there 0.5% that gets stopped out and I burn my capital? 4.3% last week. So the solution here, and of course I'm oversimplifying, there's a lot more variables that go into it. Increase your margin, to 10%, so you can weather swings like that. Ideally 20% if you ask me, but I'm not qualified to give the advice. So it's just an example. Okay, so let's talk a little bit about the qualitative approach. So qualitative approach works together with the quantitative approach. Best works when they are together. Your quantitative approach is what I call kind of like set the quantitative context. If you go back a slide, you will see. So you can analyze that data. It exists in your organizations. So you can see, okay, if the customers that I have, trading with 100 to 1 leverage, I know that 0.5% they're done. Okay, so applying that, to the kind of like to the qualitative approach. Okay, so I have the quantitative picture of my customer. The high risk traders, they like to use high leverage. They like to trade S&P 500. So the context is set. But I want to go and I want to ask my sales team, all right, can you guys reach out? Can you talk to the person? Let's speak to him one-to-one. And that's really what qualitative approach is. So it allows your teams to talk directly to the customers. Ascertain the problem, offer a solution. Relevant solution, this is actually now goes a bit into the kind of like sales marketing side, but if you offer relevant solutions, you're building rapport with your customer. If you're building rapport, obviously you encourage trust, loyalty, eventually advocacy. For instance, if you are a client of a brokerage and you have a problem, maybe things are not going your way, but then somebody reaches out, talks to you, offers you a solution. It doesn't even matter what the solution is. It's that your problem got solved. What's your feeling? You're happy, you're satisfied, and that's because that person was able to identify your problem, solve it for you, not necessarily solve it for you, but solve it with you rather. And then what's the feeling that comes after that? It's you trust that person. You do this a few times. You become this is the brokerage I want to place my trades with. This is a brokerage I want to place my investments with. And then a couple of more times you go and you tell your friends about it. So yeah, so the best way in the qualitative approach, human contact, phone, in person. In person always works better, but it's sometimes not possible. Phone. Leverage your sales team, relationships teams, customer support teams, success teams, however you call them. But of course, you will run out of time. So alternate methods. We live in a digitized world. I caught the glimpse of the previous speaker's presentation. He was talking about digitalization. It's absolutely true. We live in a digitized world, so personalized communications, email, SMS, this is nothing new. The difference is, don't send, try to really leverage your technology and data so, communication that reaches your customer is seen as if it's coming just for me and it's solving my problem at a time. It's not, don't profile me based on, my gender, my trading patterns, try to profile me based on my problem. That is kind of like the most important thing here. So yeah, and align your quantitative approach with your qualitative approach. So yeah, and the final piece there, treat each customer as a client. So you want to create that one-to-one relationship. So okay, so I'll give you an example from my own life. So the next slide, that's me dressed a bit differently from what I'm wearing today. And the reason, I didn't choose this picture at random. I chose this picture because I wanted to show the majority of us, I've been trading for 6 years or so. Majority of us, we're not dressed in suit all the time or tie. We are just the day-to-day, individuals that go about, do our business wherever you live, whatever you do. So essentially, most of us are, that guy in the right top-hand corner. And, yeah, so I'll give you just a bit of my background and applying it to what I'm saying, why I'm passionate about, solving problems. I've been trading around 6 years. Different things, U.S. indices, oil, natural gas, a bit of crypto, different settings. The leverage I use there, I self-classify myself as mid-sized retail. So I guess kind of if we go by numbers, majority of the customers would be. And how many nights have I, not slept to understand the markets? Over 50 if we consider, and I mean this is not a joke, over 50 if we consider full nights, when I didn't disconnect. It was just the goal to understand. If I count partial sleepless nights, there'll be even more. So, the end goal here, 6 years forward, do I understand the markets? No, yes and no. I understand one thing. It's impossible to understand the markets. Markets are irrational. So you need to understand, that's the most important thing what I've learned. Everything is based on probability. Everything is based on statistics. So trying to be smarter than the markets will get you nowhere. So, but what I'm trying to say, so self-taught, 2 years passively, 2 years actively. The brokers that I traded with, I'm not going to name any names, but the brokers I've traded with, so me as a customer, I felt my quantitative context that I spoke about, these guys never understood it. What it meant for me, points of failure. Many times I was at the point of giving up, I don't want to do it anymore. Delays in committing customer funds. And if we flip back to where I am today, look at, the kind of the broker side of things. The end result here is that for me, it was more, longer, more painful journey, but for, reduced customer loyalty, switching, trying to find a way. And ultimately, if you're a business, then for you, what it means less revenue, because people like myself and others, will eventually leave if they don't get their problems solved. So yeah, so how do you kind of solve the problems? Ways to meet customer needs. Customer needs are they're unique to each brokerage. I mean, I think if somebody comes on the stage and says, you know what, people in the Middle East are trading gold, like I'm just doing right now. I think it's kind of it's a very subjective perspective. So it can come from experience, it can come from maybe the clients that you have in your organization. However, it's each business, each setup will be unique because your value proposition will be unique. And so as a result, you really go back to that data point. You need to look at what your customers are doing. I can tell you, for example, where I work, I've been looking at the client data yesterday. And and I see that majority of people are in and out of the positions on the same day. So I mean, it's just a behavioral pattern. It's not good, not bad. It's just what customers do. And if they're in and out of the position, on the same day, I can then, without even looking at it, I know that they're trading with high leverage, and that's the strategy. It's a high risk, high reward strategy. So at the end of the day, as an organization, you need to study these behaviors because only then you can begin to apply solutions. And your solutions are. Study your customers, and your solutions will be very varied. I mean, here I have a couple of examples. In the outsized risk trader example, I think that person would benefit from some technical education about margin rules and so on. However, there are other other solutions. Whether you have a client problem and you want to kind of like treat them a bit differently, so you have to implement or you have to look at doing something bespoke for these clients. Whether it's your marketing and pointed marketing and sales communications and strategies. Whether it's your partner strategy, do you sit down with your partners and so on. So ultimately, it doesn't even matter what it is. Like at the end of the day, it's the trend, it's the behaviors, it's the data points, it's what you are looking at in order to identify ultimately the problems that people are trying to solve. And of course, this approach you can actually apply to partners as well. So yeah, so that's that's kind of like me coming full circle. Meeting your customer needs, most important aspect of your business. Why? Because by meeting customer needs, you can begin to understand your customers. Without understanding your customers, you will have eventually no customers. And obviously, if you have no customers, you have no business. So guys, I've been looking at this timer. I think that's the end. I'm here at self-promotion. Apologies for that. But yeah, booth number 7 if you want to talk. We've got 4 minutes left, so I can take questions.
Yeah, good afternoon, sir.
Hello.
Good afternoon.
Yeah.
Yeah, you say for 2 years you were not able to meet up. So I want to ask, what was your turning point that makes you to start becoming a successful trader?
Well, thank you for the question, and it's an interesting question. I mean, I wouldn't call myself a successful trader, and maybe if I did, I wouldn't be standing here. I think I'm like the majority, I'm getting what I guess needing to get out of it. But in terms of the turning point, I think it's sort of like it's just a persistence. I really wanted to understand financial markets, not just from a point of view of reading it from a book. I wanted to understand if I can I wanted to understand basically so that I could understand what the customers feel, and ultimately if I can benefit from that, then that's good. But essentially it's persistence, and it's sort of like that. If something doesn't work, you stop doing it. You try to go and try to do something else, and eventually you arrive at the point where you're kind of like, I'm happy where I am.
Hello.
Hi.
So I'm here for the first time, but then I just want to understand what is the fast commodity to trade if you're a beginner?
Say it again. Sorry. The best way
to start.
To start.
Yeah, as a beginner. I mean,
okay.
Which commodity is best?
Which company? Well, that I'm not going to tell you, but in terms of how to start, I think the best way to.
Hello. Not company. I mean commodity.
Say it again, sorry, I cannot.
Commodity. We have FX.
Commodity.
Commodity.
Okay.
That's what I'm talking about.
I would say the best way to, if you're just in the beginning of your trading journey, and again, don't take this as a trading advice, so don't have disclaimers, but I would start with unleveraged products, whatever it is. If you can buy physical spot gold, you want to trade commodities, do that. If you're into silver, I'm into silver. I like silver. So, start with that. Unleveraged, don't even consider leverage. Why? Because you need to understand, if you haven't done this before, you need to understand, if you invest, let's say $1,000 in gold, you have $1,000 worth of gold, you need to let it go for a month or so. But it's a physical asset, so you're not going to lose your money because it's a physical asset. And the reason for that, why you start with unleveraged assets, whatever it is, it doesn't need to be commodities. But if it's commodities, you want to understand the dynamics of how the market moves. 2% up, 2% down. Sometimes you're $20 up, sometimes you're $20 negatives. Because ultimately, if you can make 1% with $1,000, you can make 1% with 10,000, 100,000. But okay, that's a bit different because that goes into psychology of trading. So I would say the most important thing, start with the unleveraged instruments. Find the platform that gives you that. I started with stocks. So I started with Apple, Google, US stocks, unleveraged, just to get into the habit of seeing the market moving. Because you need to get accustomed that you will not be up all the time. You're going to be down, in fact, most of the time. But it's weathering that down that will allow you to progress. So start with that, and after that, you can start experimenting with leverage, which really all it is just a loan capital. Okay, cool. Well, guys, thank you very much for your time today, and enjoy the event, and hopefully see you soon.